Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 24th of August to the 28th of August 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets we're going to be looking for in this coming week and also future weeks. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we highlighted the fact that the US dollar index was starting to lack a bit of momentum. It was struggling to break the lows with any real conviction, but the downtrend is still intact. And we highlighted the 93.67 in previous videos to look for a decline to the downside. We did trade into this and we had a really nice sell-off, and we came very, very close to the target set. We made new lows, but we just missed the target at the 91.99. So very simply put, as we're now getting a pullback towards the 93.67 once again, this is going to, once again, be a great opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking further declines down towards the next key of supports to the downside of the target set from last week at the 91.99. And if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2 at the 90.50. So all this really simply means we're not going to be looking at trading the dollar index itself. This is really just a compass to the dollar pairs. And it means we do go into this week with a bearish, slightly bearish to neutral bias on the US dollar because we are lacking some momentum, but we do preference dollar weak positions once again going into next week. So the next market we're going to look at is crude oil. Now, last week we noted that the uptrend in crude oil is still intact and we do favor long positions in this market. You can see we started last week around here and we pretty much went nowhere. We just moved sideways. So very simply put, going into this week, as we are approaching the next key of resistance to the upside and the target set at the 43.69, any further pullback towards the 33.66 will be considered a great opportunity next week to start to look for bullish breakouts to the upside. And if we get the right kind of bullish breakouts in this market, we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at the 43.69. And if we can get a break through here, and this may take a couple of weeks because you can see how much further to the upside the 48.27 is. When this happens, when you get these large gaps like this between the levels, very often means you can see a large rally. So if we do break the 43.69, we could be coming up to the 48.27 quite quickly, but we'll wait and see what happens. But if we do get above the 43.69, we're going to be looking up towards the next key of resistance to the upside and the target set at the 48.27. So all in all, we do favour long positions in crude oil next week, even though we pretty much had a nothing week last week. So the next market we're going to look at is euro dollar. Now, last week we were looking for long positions in euro dollar, and the targets we highlighted last week was the 1.1960. You can see this was the major target to the upside. We came and we took this out, and almost to the pip we turned, and that was pretty much the high for the week. So there's a really nice move last week in euro dollar. Because the downtrend in the dollar index is still intact, we do favour long positions once again, and this pullback is simply viewed as another opportunity to look for bullish setups in this market. So going into next week, if we can come back, especially if we can retest broken resistance from the past, turning support at the 1.17490, this is going to be a great place to, again, start to look for bullish setups. And this time we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, at the 1.2050. So the next market we're going to look at is pound dollar. Now, last week we highlighted the 1.3200 as a target and the next key of resistance to the upside, and we did have a really nice rally into this target. The target was in fact right there, and you can see that pretty much capped the move for the week as well. We came and retested it once again. So we did have a nice move to the upside in pound dollar, although this market is starting to get a little bit restricted. Going into next week, we do once again favour bullish setups in this market, and this pullback to the 1.30450 is simply viewed as another opportunity to start to look for bullish breakouts to the upside. And if we get the right kind of setups in this market, we're going to be looking at initiating longs. So if we can start to reverse and we can start to put in some reversal patterns down into this area, and these are tradable setups we'll be looking for. If we can put those patterns in down here, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.3364. So the next market we're going to look at is US dollar yen. Now, last week we declined to the downside and we actually had a reversal in the US dollar yen. We're forming a little bit of a head and shoulders pattern here, and especially with a weaker dollar, there's a good chance, especially if we break this low, that this becomes a confirmed pattern. We start to see further declines to the downside, taking out This target first and foremost is our target for next week, then the lows, and then also down here at the 102.58. So very simply put, we're starting to get a correction, which is great. We've had this momentum sell off to the downside. We do favor short positions in US dollar yen going into next week. If we can start to pull back a little bit further, that would be even better because we can get better risk to reward setups. But any further correction into this area is going to be viewed as an opportunity to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 104.70. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 102.58. And again, this is probably going to take a couple of weeks if we are coming down here. You can, very similar to crude oil, see there is a very large gap between the levels here. And this happens because in the past, this means that there was an explosive move between these levels, and that's why there's a large gap. And when you have that in the past, it tends to repeat in the future. You can once again, if we break the 104.70, we could see some quite steep declines down to the 102.58. So I'm putting this on here for you, but just bear in mind this second target may be a couple of weeks away. The primary target we're going to be looking for next week is the 104.70. So the next market we're going to look at is Aussie dollar. Now we started the week down in this area and we highlighted the 0.7115 in previous videos as an area to look for a rally to the upside. We did rally from this area. We had a really nice move to the upside last week in Aussie dollar, making new highs, and we just fell shy of the target at the 0.7290. So a really nice move, but this pullback gives us another opportunity to look for long positions going into this week. Any further declines to the downside here, unless or until we start to break the lows of the 0.70760, is simply viewed as another opportunity yet again to look for long setups. And if we get the right kind of bullish setups in this area, we're going to be looking at initiating longs up towards the next key of resistance to the upside of the target set, the 0.7290. So the next market we're going to look at is New Zealand dollar. Now New Zealand dollar is an interesting one because it's structured to the downside against the dollar, which means that it's actually weaker than the US dollar in and of itself, the New Zealand dollar. We started the week down in this area and we highlighted the fact in last week's video we were looking for a pullback and a sell-off down towards the 0.6440. We came quite close, we didn't quite get it, so we are once again looking for this target to be reached this week. There are a number of ways you can use this information. One, you can keep this as a plan B currency. So if you start to see the dollar strengthening and the plan A currencies of dollar weakness, which will be my plan A going into next week, if it fails to materialize, you can come and look for a short position in this market, or you can what's known as synthetically hedging it. We discussed that a little bit in a couple of videos back. Or the third way, if you just don't want to trade it at all, is to use it to look at other currency pairs, because what this is telling us is the New Zealand dollar is weak going into next week. So if you wanted to look towards Euro New Zealand to the upside, Aussie New Zealand to the upside, etc., that would be a good way to use this information as well. But overall, on a technical basis, what we would like to see, if you are looking at trading this, we would favor short positions in this market, and any further pullback here, we're going to just be treating this as a bear flag. Any further pullback in this area is going to give us the opportunity to start to look for bearish setups. And we're going to be looking down towards the next key of support to the downside of the target set at the 0.6440. So just to summarize once again, the preference going into next week is for dollar short positions because of the weakness in the dollar. But if you are looking to trade the New Zealand dollar, that would be our bias on the New Zealand dollar. And you can also look for other New Zealand weak setups going into next week. So the next market we're going to look at is US dollar Swiss franc. Now in previous videos we highlighted the 0.9190 as an area to look for short positions to the downside, which was right here. And we had a really nice sell-off a couple of weeks back, and we started last week in this area. We made our way down towards the target at the 0.9000, but again we just stopped very, very shy of this. We came very, very close. We did have a nice sell-off to the downside, but we spiked up before we actually took the target out. So very simply put, we are still in a downtrend in this market. We're starting to lack momentum. We may actually be in a bit of an ending diagonal pattern. But either way, the downtrend is still intact, and we do favor short positions, therefore, in this market next week. This is simply being treated as a pullback, and any further pullback is going to be viewed as an opportunity to look for bearish setups. And if we get the right kind of bearish setups in this market, if we start to break to the downside, we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set, the 0.9000, and if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 0.8837. Just bear in mind, to come all the way down to the second target may be over the course of a couple of weeks. So next market we're going to look at is US dollar CAD. Now we started the week last week right here, and we highlighted in last week's video we were looking for a sell-off to the downside. We were looking for further declines in this market and for this to make lower lows. We did favor short positions last week. We came down and took out the target set at the 1.31720. Now very simply put, going into this week, I would like to see this market correct a little bit further because we are coming closer to the second target at the 1.3081 from last week. So any further pullback in this market would be fantastic because we get really nice risk to reward setups in this market. But any pullback towards the 1.33320 is going to be viewed next week as an opportunity to start to look once again for bearish setups in this market. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 1.3081. And last but not least, we have gold. Now, last week we highlighted the fact this sell-off was really just still a pullback. The overall trend in gold has not changed. The uptrend is still intact, and therefore we were looking for long positions in this market. We started the week right here, and we did have a really nice rally, but we ended up basically negating that rally, and we came back, and this ended up being a nothing week in gold last week. Very simply put, we do still favor long positions in this market unless and until we break the 1861.50. Any further pullback is simply viewed as another opportunity to look for bullish setups in this market. And we're going to be looking at initiating longs. First of all, going into next week, because this was such a steep sell-off, we're going to be looking back up to the highs over here as the first target. So the overall key area resistance and our major target is the 2104, but this may take a couple of weeks. If you want a conservative target for next week, you can look for the highs over here or roughly the 2020. So the target we'll be looking for next week is a rally back up to new highs at the 2020.20. And if we can continue up from here, we're going to be looking up towards the next key area resistance, the upside, and the overall major target at the 2104.380. So overall, as this uptrend is still intact, we favor long positions. We do see it as long as we do not break the 1861.50 coming up to the 2104.38, but this may take a couple of weeks. Therefore, the highs over here will be our initial target for next week, but our overall target remains the 2104.38. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.